Welcome to the Smart Business Revolution.
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 You want a revolution?
You say you want a revolution?
Revolution. The revolution.
It's going on right now.
Welcome to The Revolution, the Smart Business Revolution podcast, where we ask today's most successful entrepreneurs to share the tools and strategies they use to build relationships and connections to grow their revenue. Now, your host for The Revolution, Jon Corcoran.
All right, welcome everyone. Jon Corcoran here. I'm the host of this show. If you are new, if you've not heard this show before, then go check out the archives because we've got some great episodes with smart CEOs, founders, and entrepreneurs of companies and organizations ranging from Netflix to Kinko's, YPO, EO, Activation Blizzard, Lending Tree, OpenTable, and many more. And I'm also the co-founder of Rise 25, where we help connect B2B business owners to their ideal prospects. And my guest here today is Jon Maddux. Got an interesting story. He was once a on-staff songwriter for Warner Brothers. He wrote music for bands like Smash Mouth and Plain White T's. And after a bit of a change in the industry, ended up in real estate and mortgage finance industry, where he's been for 25 plus years. He's also started a couple of other interesting companies, including during the mortgage crisis, a online website that helped customers navigate the hardship of foreclosure and short sale, which is something that I was involved in earlier in my career. So we'll talk about that. Got a lot of national media attention around that. And now also has a tequila business, which is really fun. All of those make so much sense. Country music, songwriting, mortgages, tequila. I mean, that's, you can draw a straight line between the three of those. So we're going to get into that. And of course, this is brought to you by Rise 25, where we help B2B businesses to get clients, referrals, and strategic partnerships with Done For You podcasts and content marketing. You can go to rise25media.com to learn all about it. All right, Jon, such a pleasure to have you here today. And I want to dive into first about 2008, where financial crisis time, the entire economy is kind of melting down. And you actually were a songwriter for Warner Brothers. You were in Nashville. First of all, how'd you end up on that journey? That's a fascinating journey. That's not every day that you hear someone has a career like that.
Yeah, so music was always a passion of mine from like younger age. So around 15, I started playing guitar. But before that, I was playing piano. Like my parents made me, sit and practice when I was 8 years old with, an older, really old, like a grandmother teacher. And I just hated it, practicing piano. And then when I was 15, I like really started loving guitar and hard rock music. And so I got like, super into guitar. And then I started like a heavy metal band and did that through high school. And then after that, just continued to be in bands. And that was kind of like where my path was going. And so music was just a huge part of my life. My mom's a singer. My dad's kind of a songwriter. They were both songwriters when they were younger and creative people. So I just kind of have that in my world, when I was younger.
Yeah. And so you did that for a while. And were you doing mortgages at the same time, or you were? Okay.
Yeah, I was in like the height of the mortgage peak back in 2004 and through 6. Like I was kind of had my business on autopilot and was just, making enough money to where then I could just focus some time on music. And I had a recording studio at my house, and I just put my music online, and a manager that was working at a huge film company, and they did music management as well, named Lex Lipsitz. He found me online. I think someone sent him an email of my music, and he called me one night, and I was like, I was like, is this real? And he was from Beverly Hills, and he's like, come down. I love your music. Come play some songs for me. And so he ended up getting me the deal with Warner Brothers, and I signed to his management firm, and which is Relativity Media, which is a huge movie producing company. And so that was a fun ride. I mean, I got to meet a ton of people, along the way, and just be in rooms with people that, that were, fantastic artists and writers. So it was a cool journey. I never got any top 10 hits or number ones, but, it was a fun time to really, put my craft to work and let people hear it and do that.
And the bands that you worked with, any crazy stories about working with any of these bands? You don't have to name which ones the crazy stories came from.
I guess the one that pops in my head was I was sitting in a room with a band that definitely had a #1 hit, and it was just the singer of the band, and the guy was, I'm pretty sure, doing a lot of drugs, and we were writing, and then he would jump on the drum set and bash away on the drum set, and then he'd come back and sit in the in the little seat, and then we'd write like a little bit more, and then he'd go in the bathroom, and it'd be back and forth, back and forth. Yeah, I'm sure he was doing lines, and I finally called my manager. We were in this really amazing studio where Frank Sinatra recorded, the Beatles had recorded. It's right in Hollywood on like Hollywood Boulevard. We were the only ones in the studio, and I finally called my manager. I'm like, and this was before they had a #1 hit, and I was like, man, I don't think this session's going really well. And my manager's like, just finish it out, and he's like, we won't do another one with them again. Sure enough, like 6 months later, we never finished the song that we set up to do. Sure enough, they had a #1 hit. And I was like, man,
wow.
Like if I could have only just, if that session would have gone better, whatever. You just never know, right?
Right. So you're this is kind of like a crazy story. Like you're putting your music online, and this is the mid 2000s, you said? I mean, that's super early days. Do you remember what platforms you were using, and what inspired you to put your music online before a lot of people were doing that?
It was like, I think it was like Broad Jam or something like that. It was just like a free platform. You could put and it might've been MySpace. You could put like 3 or 4 songs on MySpace.
People did that, yeah.
So I think I had songs on MySpace, and I think back then I was about 29, maybe 30 years old. And I was like, I was just still have this like aspiration that I was going to be in I was going to start a band and make it, so like that, it was more like around me as an artist, at that point, even though it was like, I probably already passed the age of where, like I could make it, but, I was like, yeah, I'll do writing. And they offered me a pretty good contract, and it was a 3-year, it was 1 year with 2 options, and they ended up renewing 1 option. So I ended up doing it for 2 years. And then, when the crisis hit, like the music business took a hit too. They canceled a bunch of artists that they had records coming out for, that I had songs that were on the records. And so it was a big letdown, not only for the mortgage side, but also my music aspirations too during that crash.
I mean, that must have been a pretty big impact on you, since the mortgage side was crashing, and then you had the music side as well.
Right.
What drew you then to go back towards mortgages? Because there's a lot of people that left the industry entirely after 2008.
Well, so I went into the foreclosure business then, because what happened was it was so much of a letdown to where, like, we still had borrowers that wanted loans, but there just wasn't any loans, or there wasn't any lenders that would do the loans or buy the loans. So
yeah, everything got shut down pretty quickly. Yeah.
And we were just kind of just figuring out what to do. And that's when, the idea for You Walk Away came in mind. Is like, I had been in the mortgage business at that point about 11, 12 years. And I had not a clue really what happens in foreclosure and like what the process was. And, we never had any issues like that. I think I came into the mortgage business in the late 90s where there wasn't any foreclosure crisis. There wasn't really much, there wasn't very many foreclosures over that span of 10 years, 11 years. Yeah. So I was like, if I'm a mortgage professional and I don't understand the foreclosure process, and I was like, this is happening. There was these loans, these toxic loans that were being given out with like 2-year fixed with a 3-year prepayment penalty, and then it adjusts like 2%. So, they couldn't even sell their house. They couldn't refinance. They couldn't do anything. So I was like, this is going to be crazy. And this was like in late 2007 when I started thinking this way. And I was like, there's got to be something to where people can get educated about what to do, if they can't sell, if they can't refinance, if they can't, have no money, they're stuck, they have to have a place to live. So we just dug in. My business partner at the time, that he wasn't my business partner at the time, he was a friend, and he was a lawyer. His name's Chad Rule. And we got together and, put together a business plan, and it ended up literally in like within a month of our launch, it just got all over the news. We had a blogger who was a major finance blogger at the time. He had something called, it was a long name. It's like International Finance Blog Spot, something like that. But Mike Shedlock was his name, and he went by Mish, M-I-S-H. And he just literally I had one interview with him. And then the next morning after he posted his blog, the phone just didn't stop ringing. It was
Wow.
just nonstop, like Fox News, 60 Minutes, Time Magazine. I mean, you name it, they were all like the phone bank was lit up with like phones nonstop.
And how did it generate revenue? Was it just an educational platform, or were you actually helping people to negotiate out of these mortgages?
So that was the thing that I think we did right, is we didn't get into the negotiation. We weren't in a middleman in between them and the banks, because that's where like you got into trouble with the financial services aspect of it. And there's a lot of people that went down and got in trouble. We were, we called ourselves an advocate, and we connected them with a lawyer for a consultation and a CPA. So it was kind of like a prepaid legal in a way, had a little element of that.
Did you get like a commission for referring them, a referral commission? Is that how you monetize?
No, we monetized by charging them $1,000, and that was for the lifetime. So, and then we broke it up into 3 payments of $332 or, something like that. And then we ended up shifting it to a monthly recurring billing, which was a lot less and was a lot cheaper. It was almost like, it was like $100 a month, something like that. And the process was like, we're going to give you all the information for your state of the foreclosure timeline. We're going to give you all the tax ramifications. We're going to educate you so you are completely aware of what's going to happen if you decide like, hey, I can't sell, I can't refi, I can't afford my house. What do I do? And so we'd also we had a short sale division. And so that was lucrative. We had eventually, the lawyers, would either, we had bankruptcy lawyers that we could refer to. We had modification lawyers that we could refer to. So there's a lot of different ancillary, income streams that came from that business.
And, I was a bit in this space at the same time, because I was working for a real estate law firm that had a lot of clients that had properties. And we immediately had a lot of people coming to us needing it, desperate for advice. And the banks were not negotiating. And it was a sad time. I felt so bad for so many people that had gotten upside down, people that lost their retirement, lost multiple properties and stuff like that. And then quickly there was a backlash against anyone who was helping the actual borrowers. How did you avoid that, or did that become an issue for you?
Well, we definitely had a couple inquiries from attorney generals in some states. California did, Indiana, I think Florida, and
that must have been a scary day. Right?
And luckily, my business partner Chad, is a lawyer.
He's a lawyer, okay.
So he had a really good network of lawyers too. I mean, he's not he's an estate planning lawyer, state attorney. So, he just had a ton of network of great lawyers that we could tap into. But we knew that we weren't doing anything wrong. That we looked at the statutes of kind of what they called financial services, and we didn't fit it. We maybe we're 2% of that or 5% of that, because financial services really were like, you take money up front and you act on behalf of the borrower to the lender, or something like that, where we were just providing, we called it our You Walk Away kit, which was like a package they'd get in the mail or via email, and then these consultations that they got. So it was very like customer facing, and we didn't ever deal with the lender or anything like that. So we luckily won all our lawsuits. I think we settled one for a very small amount. But
with attorneys generals, or with
Indiana was the only one we didn't that we didn't end up staying in that state. So we were like, we don't really do a lot of business in Indiana, so we just took that off our state list, and that was the only one that we still settled with them, but it wasn't like we could in the settlement we couldn't continue doing the business in that state.
What about
everywhere else?
What about the lenders? Did the lenders sue also?
Never had a lawsuit by a lender. They were busy with so many other things, I'm sure, legally. So,
right.
But at the end of the day, I think when you look back on it, and we kind of knew this when we were in it, but it was the interesting thing was the lenders, their worst nightmare was when someone just trashed a place, took off, and then there was criminals coming in and stealing copper wires. And so what actually happened is with our foreclosure timeline, these homeowners knew that they stayed in their house. They knew exactly when that foreclosure sale was going to happen. They knew exactly when, everything was going to happen. So they had like a peaceful kind of transition out of their home. And we actually would give them, like, when we got real-time intel from things, because our finger was on the pulse of the foreclosure stuff. So like when we found out that they were giving cash for keys, like we would pass that information on to the borrower, say, look, if you sweep the thing clean, you make it real nice, and you leave and you exit peacefully, you're going to get, $1,500, whatever it was they were doing at the time. And they were like, oh, great. Wow. So it's like basically free. Our service was basically free because a lot of them didn't know that. They would just in the middle of the night, leave the house and it just, that was never good because the lawn would grow and it looked like this terrible, situation. So I think end of the day, the lenders probably were like, we don't like that you're saying it's okay to walk away, but we prefer a peaceful transition than a, hostile kind of foreclosure situation.
Yeah. Yeah. Now you did a good job. You mentioned in 2007, you kind of forecast, you saw like all these loans are going to adjust and people are going to be in a tight squeeze. So you saw that coming.
Yeah.
I'm sure when you're doing You Walk Away, you anticipated, because I was thinking this, other people are thinking this, like this isn't going to last forever. So even if the business was doing really well, I'm sure you knew, this is going to be a phase. So how did you prepare for that?
The second phase was something called afterforeclosure.com. And so we had a website called afterforeclosure.com. That was, so luckily being in the news and all that, we had so many inquiries of the walkaway thing. We had, I think, over 50,000 names, emails, information. We ended up having over 10,000 paying customers during those 3 or 4 years that it was booming. So after foreclosure, really, because being in the mortgage business is like a curse. You can never get out of it, really. Like you can try, but the money's too good, and it always brings you back at some point. But so we went and did afterforeclosure.com, which really was like a lead service. So like we gathered, we would market the current 50,000 people we had in database, and then we would tell them like, look, here's some mortgage programs or products. Like there was an FHA product that was 3 years after foreclosure. You could buy again. There was a VA product that was 2 years after foreclosure. And I remembered that, even Chase Bank back in the day, like in 05 and 6, they were fine with 1 year out of foreclosure. So at some point I was like, these lenders they're not going to permanently put these people in, foreclosure jail. They never can be homeowners again, which some people probably legislated for. But I think that, I was like, they're going to come back. So I started preparing for that transition of what they call boomerang buyers. So people that had walked away or foreclosed, went through the crisis, eventually we're going to come back and buy again and, at a different time. And that ended up being a really great lead transition into launching a new mortgage company, which we did.
Yeah. And so you kind of transitioned out of that and transitioned into a new mortgage company. Was that Drop Mortgage, or was that something else prior to that?
That was Drop Mortgage. And that was, I tried to not, like I said, I tried to not get back into the mortgage business. Drop was a name that I had for a startup idea, Drop Valet, that was going to be like the Uber and Valet. And when that didn't really go anywhere and the mortgage business started like coming back, I was like, all right, I'm going to make it drop mortgage, because, it was like drop mortgage stress, drop your mortgage payment, drop your mortgage, insurance and stuff like that. So there's some different niches that we wanted to launch into back in the mortgage business. But yeah, Drop had a good run. I mean, we grew quickly because the product started coming back, not just FHA, but there were some banks that were like, you know what? If you put down enough money, we'll overlook the foreclosure waiting period of 3 years, and we'll do a year. We'll do case by case. So we tapped into this bank and we're able to, with like 25, 30% down, they were like, that's a good risk. These people, they had a foreclosure, but they're going to be able to, that much skin in the game. They're not going to walk away from that.
Yeah. And then FundLoans, how did that come about? And how is that different from what you were doing with Drop Mortgage?
So I think Drop Mortgage was like kind of the start of non-QM lending, which is stands for non-qualified mortgage, which is, people think it's like the new subprime, but it's not. It's more about, how you qualify for a mortgage, which when the crash came in and legislation and the Dodd-Frank, whole thing came in, which was the new legislation to kind of make mortgages harder to get and not so easy to get, like fog and mirror, and you could get a loan. Right. But all those regulations really made it very difficult for some people who were entrepreneurs and business owners to get loans. I don't know if you remember, trying, or, I remember trying to do loans for people who had maybe they'll have $1 million in the bank and they have, their tax return says a loss, but the lender wouldn't do it because they had to have the ability to repay. So the foreclosure thing was the initial like after foreclosure was kind of the initial non-QM entrance of that product. But then what they really went into was the business loans, or not business loans, but business owner loans, which we call bank statement loans. So we're just looking at your cash flow and your bank statements to produce the ability to repay, or to prove your ability to repay. And that took off in so we launched Drop Mortgage in say 2013-ish time. And then, 2016 was really when we started looking at doing it wholesale instead of retail. And the reason I think FundLoans, we thought this is definitely a needed side of the business, that mortgage brokers who are our clients didn't have a really great lender that focused on the bigger loans, the jumbo loans. We're in Southern California. Most of the loans are big jumbo loans. So our average loan is $1 million. And what I wanted to create was something that was like a Nordstrom or like a higher end, where we really care about, the broker's loan. So when you send a loan to us, we really we focus on the bigger loans. So we have more time and energy to put on each loan and give them that white glove service that they were missing back then. And so I think that's what's helped us with our success, is we picked a niche out of another niche and really focused on doing a great job and on one product. And so our retail, we wound it down because we didn't want to compete against our customers. And we wound that down, and then we just really went full board into the wholesale side.
If I can reflect a little bit, not knowing you really well, but just on what you've told me about yourself so far, it seems like there's a creative side to you. After all, you were a songwriter for a bunch of years. And then there's a more analytical side to you, maybe the mortgage side. And I'm always curious how people scratch both those itches, both those needs in their personality. And maybe I'm reading into this, but it seems like starting new companies, innovating your existing companies has been a way of kind of expressing that creativity that you enjoy.
Yeah, I think you nailed it, because I'm not I heard something on another podcast a long time ago. It was I think for Uber. It was talking about Uber's startup phase and how they called it a band of pirates, and being creative, and you just anyone that will join you, that will wear any hats, and so I feel like that's kind of more my skill set, is how to create something and launch it and get it off the ground, but then doing all the. And then it said, Uber then became over time like a naval ship instead of a band of pirates, and where you have the top down, structure and all that. And so that doesn't excite me. The top down, the whole naval thing, I appreciate it. I think that's how you make a successful, long-term scalable thing, but it's not necessarily my skill set. So that's where my business partner, Chad, is a lot better at that kind of stuff. And
yeah.
But
I think it's underappreciated how challenging it is for, the Elon Musks of the world, the Jeff Bezos of the world, who can take a company from nothing to $100,000, $1 million, $10 million, billions, and still run this company and be interested and fired up and do it for decades.
Yeah, that's a special person, I'm sure.
Yeah, it sure is.
Disruptor
And so it makes total sense that you're sitting around and you're drinking tequila one day, and tell the story. But a friend of yours who you're drinking tequila with, his wife was actually in the business of importing champagne.
We Drink Bubbles is their company. Yeah.
Got it. And so naturally you said, well, let's start a tequila company.
Yeah, we were all just sitting around having, I think it was New Year's Eve, maybe something like that. And we were all just having drinks, and my wife and his wife is the one that runs and started and founded We Drink Bubbles. Shiloh, her name is. And they were all drinking, my wife and her, close to best friends. And they were all hanging out and drinking bubbles, and we're drinking tequila. And I think just somehow it came out we drink tequila, and we're like, yeah, we have to do this. And so similar model, as it's like a sister company or brother company to the Bubbles. It's funny how champagne and tequila are so similar. Once you look at champagne has to come from a region in France called Champagne. Tequila actually comes from a region in Mexico. You can't make tequila outside of this region.
Right.
And, so there's a lot of similarities, in a lot of different ways of, it's distilling instead of, fermenting, but the growers and the makers of this craft tequila are similar in a lot of ways. So we we're just having a blast right now doing it, importing and finding tequilas that are rare and, that are not famous, like Kendall Jenner and Clooney, seems like everyone's starting a tequila brand where we're trying to make the maker of the tequila famous and make their story told and bring their kind of like family generational story to, kind of what we're not seeing here, like make tequila Mexican again, right? It's like, it's now like become this very celebrity driven tequila. And now it's like, we're like, let's tell the story of the people that are making it. And
how have you, so that's a different kind of model, selling people on a tequila subscription product versus selling loans, selling mortgages, that sort of thing. So what have some of the challenges been around building that up?
I mean, I think, there's always challenges. I mean, dealing with a foreign country and importing has been a challenge. I'm doing as best I can to learn Spanish. I mean, I learned, I live in San Diego, so I have some Spanish. I can get enough to be dangerous, but I got apps and tutors. So I'm trying to learn Spanish a lot. Muy practicando, lots of practicing. And, but the challenge I think would be, trying to carve out enough time to be able to make this business a success while still trying to make, when the mortgage business is very demanding, we're still trying to grow that and we're still trying to, so just my time allocation has been challenging. And then, it's a brand new business, but luckily, my partner's wife has a lot of experience in the subscription alcohol business. So that's helped a ton. I mean, we wouldn't be where we're at now without that. So, I mean, that's always fascinating, I think, is someone who starts a brand new industry in a completely new field that they don't have any experience in. It can be disorienting, but when you have someone who can show you the ropes, it makes such a huge difference. Yeah. My partner, Preston, in that business is, him and his wife, he's been with her the whole time. She's developed We Drink Bubbles. So he's really like taking the bull by the horns and running things over there. So it's good to have someone like that as a partner. He's a really great partner to do all that stuff. So
I know we're running short on time. I want to ask you my final question. I'm a big fan of gratitude, especially expressing gratitude to, people that have helped you along the way, peers and contemporaries. So who would you want to shout out? Who would you want to acknowledge, just thank those peers and contemporaries for, helping you on the journey?
I mean, I'd say for sure my father, Bob Maddux. I mean, he's always giving me that optimism and that like you can do anything in life, so like, having a great father is definitely contributed towards that success. My business partner, Chad Rule. I mean, he's so well connected and he's such a solid, business person that, there's no way I could be where I'm at without him too. So I'd say those two. My wife, like having a wife, we're coming up on our 20-year wedding anniversary, and having a good partner behind you that lets you do your thing and you dream your dreams and, is behind you is priceless. So
that's
I'm
great.
very grateful. Yeah.
Jon, where can people go to learn more about you and connect with you and learn about all the various different businesses?
I'd say LinkedIn or fundloans.com is like my main business, but we follow us on Instagram. We have FundLoans there. We have We Drink Tequila I check that to DMs. So if you want to DM me, you can DM me there. It's just at We Drink Tequila.
WeDrinkTequila.com or Instagram, We Drink Tequila.
Yep.
Excellent. All right, Jon. Thanks so much.
Thank you, Jon. Appreciate it.
Thank you for listening to the Smart Business Revolution podcast with Jon Corcoran. Find out more at smartbusinessrevolution.com. And while you're there, sign up for our email list and join the revolution.
Revolution.
And be listening for the next episode of the Smart Business Revolution podcast.